discussion. Let me tell you what India Edition is. It's a weekly newsletter that I author for Bloomberg. It's an insider's take of sorts on billionaires, business, policy making in the world's fifth largest economy, hopeful of becoming the third largest in a few years from now. So if you haven't signed up for this newsletter already, there's a QR code on your screen. You can scan it and sign up. It's a free newsletter, so don't worry. I am not conning you into any fees this Friday morning. The second announcement I wanted to make is that we here at the India team in Bloomberg run a fabulous WhatsApp channel. Now, it's a channel that will keep you informed of all the big news and views, but we don't spam you with 1,000 stories, through the day, just the most important ones. Again, you can subscribe to that WhatsApp channel, that's free as well, through the QR code on your screen. And with that, let me get to the discussion that we've invited all of you for this Friday morning. Now, as you all know, we're about halfway through India's 7-phase general election. It's gotten hotter, shriller, and somewhat less certain, if I can say that, and if markets are any indication. I'm approaching today's discussion in two ways. First is the prevailing political, economic, and market conditions framework. Most of you are familiar with these, so I won't go into the details. And the second approach is that, this is a synthesis at the end of the day of election manifesto promises, campaign impact, voter mood, and hence what the new government's priorities ought to be. So I want to combine both these approaches and look at important issues. And the difficult task of decoding all of this, I'm going to leave to my guests. Let me introduce them. Hiren Dasani, he's co-head of Global Emerging Market Equity and lead portfolio manager of India Equity at Goldman Sachs Asset Management. Sonal Varma, chief economist, India and Asia, ex-Japan at Nomura and Suyash Rai, deputy director and fellow at Carnegie India. So I'm going to welcome all three of them. Thank you, Hiren, Sonal, and Suyash, for joining us this Friday morning. And let me get straight into it. First with you, Hiren, because look at what the markets are doing. So let me ask you straight up. I know you tend to look at the medium to the long term, but I can't ignore what's been happening over the last few days with the Indian markets. In a sense, do you think they've become more nervous about the outcome of this election, which was not the case before voting started?
Good morning. Thank you, Menaka. Glad to be here today. I think it's quite natural that as you approach a very long drawn election, there will be some de-risking, which is part and parcel of any such event. And we think markets are still, approaching this election in a fairly mature way. And there are no disorderly movements which we are witnessing in any parts of the market. Few percentages here and there, it's always part of the natural market movement ahead of any important event. So we are not unduly worried about that at this point of time.
But Hiren, we are seeing withdrawals by foreign portfolio investors. So what are your clients saying right now? Are they just preferring to be safe and move to cash, or is this a very clear punt on what the potential outcome could be?
Yeah, I think, the headline numbers, what we see at the market level of the foreign inflow or outflow can be quite misleading.
Okay.
And I'll tell you why, because the inflows or outflows in India are a function of several things, right? Either a asset manager getting new money, or somebody like an emerging market fund or a global fund reallocating some exposure from India to the other market or from other market to India. Or it could be the hedge funds, which are very short-term oriented usually, or it could be, the outflows at some other global fund. There could be multiple of factors, and the combination of all of that, what you see is the net number of inflows and outflows from the foreigners, and the composition can be quite different. And if you look
has something changed in the last week or so?
Yeah, so I was just trying to come to that usually the short-term flows are not a very good indicator of what the momentum is. It could be combination of whether somebody is trying to de-risk. It could be combination of whether somebody is trying to find better opportunities in the other markets. Remember, China has recovered quite well in the last couple of months as well.
Yes.
Valuations there were pretty cheap to start with. So I think you are getting a message from behind from someone.
Oh, is there? Okay, well, I'll take care of that. But let's go ahead because we have an audience watching us now.
Yeah. So it could be combination of several things, and my sense is that flows are not driving the fundamentals, right? Fundamentals will drive the flows, and in a very short term, flows can drive the market here and there, but eventually it's the fundamentals which will prevail. So I frankly don't pay that much of attention on the flows on a day-to-day basis.
So, if I was to sort of get to the meat of this, then are you saying that irrespective of what the outcome of this election is, it's not likely to shape the medium to long-term direction of this market? We could see a reaction in the week or two following the result, but eventually you believe that this market will be driven by structural, more fundamental, issues. For instance, the China trade and the recovery of that China trade, which might move some money back into China and away from India. And I'd love your view on that. India's weightage in MSCI indices, which has been increasing, so that works as a counterbalance, so to speak. And then, of course, all the broader fundamental economic issues.
So let's take a step back. Why somebody would be interested in investing in India if you're a global investor, right? I think India represents a unique combination of scale, growth, and diversification. Today, there are not many markets in the world which presents you all the three. Scale, because we are already, as you said, fifth largest economy, and likely to become third largest in a not so long, not long time. In probably 2 to 3 years, India would be third largest economy after US and China, at about $5+ trillion in few years. And growth, and India is growing at about 11% in nominal terms, not only for 1 or 2 years, but it has been growing at 11% in nominal terms for a long period of time, and it can continue to grow at that pace for a long period of time. And finally, the diversification, right? Today, India's market is very deep and liquid market at about 4.7 trillion market cap, more than 5,000 listed companies, more than 300 companies with $1 billion plus market cap. So if you're a portfolio manager, if you're a stock picker, there are quite a few opportunities to pick and choose from. The other thing which people don't appreciate is that India's growth is very much domestic driven. India's growth is very much demographic driven. If you look at the correlation of India's markets compared to the rest of the emerging markets, it's fairly low, because we are fairly idiosyncratic that way, and we, most of the times we are more driven by what happens to India fundamentally. Yes, we are integrated to the rest of the world, but there is a genuine diversification benefit which India brings to a global portfolio. So I think those are all the structural reasons to be bullish about India, and those reasons are not going away anytime soon,
irrespective of who comes back to government.
Well, I mean,
irrespective of what happens to China. I mean, if we see a stronger recovery in China, do you think there will be a significant, sort of FPI shift away in the next 6 months?
Again, I think what happens to India over a medium term will be much more a function of how India's corporate earnings growth and the economic growth will pan out to be.
Okay.
I'm not a best judge to take what will happen in the next 1 month or 3 months. I mean, that's always a coin toss in my mind, and calling a near-term market is always a fool's game, and I would not want to do that. But obviously,
okay. Let me rephrase, Mike. I'll come to corporate earnings in just a bit, but before I move to Sonal, I want to just quickly put this very short question to you. Let me rephrase my question. If election outcomes aren't likely to have, let's say, an impact for more than a month or two, do you think that the most significant impact in the next 6 months is likely to be the recovery in the China trade, if at all, based on the economic recovery in China? Because all the other fundamental factors that you spoke of in India are all the medium to long-term factors that support a bull market, right?
Yeah, so I think obviously China's recovery is important, and at some level, if China recovers, it's good for the global economy as well.
Sure.
India has also significant trade linkages with China, and China's recovery can be seen in a positive way for the global recovery as well. I think as long as Indian corporates continue to deliver mid to high teens earnings growth as what is expected for over the next couple of years, and double-digit earnings growth for a long period of time. I think irrespective of what China does, India will continue to attract its own share of attraction.
Okay, all right. Sonal, can I come to you? In your April report, you've estimated GDP growth to rise by about 7% per annum. That's between the years 2024 and 2028. Now, let me ask you this question. Is that election-proof and Modi-proof?
Menaka, I think if you look at the last 20 years, actually, the CAGR in India has been close to 7%. So I think the underlying dynamics driving growth in India, which is the domestic part of demand, productivity, demographics, I think baseline for India is anyway 6.5. I think the question here is how much additional delta do you get over and above that 6.5, and what will be the composition of growth under different political dispensations. I think what's interesting, sort of comparing the two manifestos, is the approaches. I mean, there are some commonalities, but the approaches are a bit different. BJP's manifesto and what we've seen in the last 10 years, it's been what I would say is more a supply side driven policy approach. So it's growth with macro stability, focus on infrastructure. Essentially, the idea is to put conditions in place that lead to investments picking up, and that creates jobs and that drives consumption. The approach on the Congress manifesto is a bit different. Like in the manifesto that's just come out, there's promise of an urban employment guarantee program, a lakh transfer to women, MSP guarantees, education loan waiver. Some of these promises are therefore more direct demand side reflationary policies. Of course, there'll be a fiscal cost involved with these policies. And what happens therefore under these two different scenarios, I think is the composition of growth will be likely different. So, you're looking at more of investment and productivity driven growth, in the first policy side, whereas the composition of growth could be more consumption driven because you have these reflationary cash transfer policies that drive more consumption, under if, for instance, the Congress manifesto is implemented. So I think that's where it's different.
Okay, this may be a premature question, right? Because we went into this election with almost all of the opinion polls pointing to a return of the BJP. And so far, we have no reason to believe that that may not happen. The numbers may be different depending on who you talk to. But I'd still ask you this question, Sonal, because you've modeled it in your report, that if we were to have a non-BJP government, which is a Congress-led, alliance government, there are some numbers you've put to where you think interest rates would head, based on the differing approaches, so to speak, to growth in the economy, where you think the rupee would be. Can you just give us a quick overview of what you think some of the outcomes will be in contrast to, a return of the Modi government?
I think, first and foremost, like market expectations are quite important. And expectations, as you were asking, Hiren, there's some nervousness, but I would say the baseline, speaking to most investors, is still it's going to be a BJP-led government. So that is an expectation. And therefore, in the scenario where BJP does not come back to power, I think from a markets standpoint, that would be a disappointment relative to their current expectations. And okay. Therefore, there's sort of a knee-jerk reaction. But so I think from a more medium...
You're not as sanguine on the equity markets as Hiren seems to be, though, of course, he's taking...
I think we need to differentiate between the near-term and the medium-term impact. I think the near-term impact depends on, the expectations investors have going into the elections.
Absolutely.
From a medium-term perspective, what matters is essentially the fundamental story. And I think, the fundamental story for India in terms of having cleaner balance sheets today is definitely a positive, irrespective of who comes to power. And therefore, a 6.5% real growth per annum is a given in that environment. India is seeing supply chains move towards India. The focus on infrastructure, even under the Congress administration, I think the focus on infrastructure spending will be there. The focus on judicial and bureaucratic reforms will be there. So I think there will be some elements of policies which will continue. Now, from a medium-term perspective, though, if some of the cash transfer guarantee policies which are more reflationary in nature are implemented, then in that scenario, there will be an upward pressure on the fiscal deficit, and which would inherently also be slightly more inflationary. And if you are going to spend more on social sector schemes, then the allocation towards infrastructure at the margin will be lower than what we have seen in the last 5 years. So I think under that scenario, we would still think India can grow at least 6.5% per annum. But that would potentially be a macro environment where the medium term, not immediate, but over the next 3 to 5 years, at the margin, the relative to the baseline, the inflation and the fiscal projections will be slightly higher. As I mentioned earlier, I think the composition of growth could be different. So you will still see, investments do okay, but you would probably see a faster increase in private consumption because there's more sort of cash transfer and reflationary policies that are likely to be implemented in that scenario.
And that should give a fillip to corporate investment, which is something we've been waiting and hoping to see a return of, but it's been a very meager return so far, right?
I think that's a more complicated aspect because the decision of corporates to invest is a function of consumer demand. Obviously, that's extremely important, but there are bulk of other macro factors that also become quite important. I do think that if we continue to focus on more infrastructure creation, which is quite important, we are seeing, as I said, the supply chain relocation to India on the electronics side. I think even on the capital goods side, there's some evidence there. And some of the sectors that are more linked to infrastructure spending, like on the cement, roads, metal side, companies there have announced capex expansion. So probably it's been like a decade of drought on the private investment side. So it should be more a matter of time before private investments pick up, in my view.
So I just to summarize this very quickly, because I want to go to Suyash, but Sonal, what you're saying is, given the two differing approaches, depending on what outcome we have, though the outcome right now, the expectation is more skewed towards a return of the Modi government. But we could see that there are pros and cons in the return of both. And if an opposition alliance were to come to power, we could see a consumption-led growth, continue in the Indian economy, though it could have risks of higher fiscal spending and therefore inflation and the impact on bond markets, etc.
That's right. And I think we need to understand that the near-term versus medium-term impact is very different. So beyond any knee-jerk reaction that markets, have on the election day, I think there is a baseline growth that India will have. And we've made, a lot of effort in terms of cleaning up the balance sheets, having the right fundamentals, putting everything in place. And that's more important than anything else. And therefore, I do think we have a very strong foundation in place today, no matter what.
Fair enough. All right. Suyash, if I can come to you, what would you identify as maybe the most important political economy challenges right now? I want to say cooperative federalism. Cooperative federalism is at the center of almost anything we talk about. And this deterioration we've seen in the center-state relationship, is going to be a sort of a highlight of whatever the new government has to deal with in the months to come. But I'll leave this as an open-ended question with you.
Thank you, Menaka. I'm happy to be here. Let me just take a step back and look at the big picture of what's happening as far as investment in India is concerned, and then I'll answer your question. I'll certainly answer it. So I agree with the other panelists on this discussion that India is in a very rare moment of opportunity. Maybe once in a generation, such moment comes when two things are happening. Investors and lead firms in global value chains are looking to move to other countries away from China, which is the biggest manufacturing hub of the world right now. They're looking to diversify away. The other thing, a new kind of emerging new technologies are coming, in which some of them, at least, we have some capabilities in. Like artificial intelligence is a general purpose technology, and it could drive a lot of economic activity going forward. So it's a rare moment of opportunity. India has many comparative advantages in a range of goods and services that we can make, but we don't make enough of. We have a fair bit of macroeconomic stability. We have political stability, a lot going on for us right now. But if I look at the outcome and I look at our share in the global investments, especially FDI, which is what I mainly care about, uh, we've not really been able to benefit from this moment so far much. I would say. So if you look at the last 3 years, in 2022 there was a slight uptick in our share of global FDI, but in 2023 it's collapsed. In fact, last year 2023. FDI in India was at the lowest in many years. It was less than 1% of GDP. So what gives? So I'm a political economist, so I'm going to give you political economy answers, and I'm going to read from what I've seen in this campaign, especially some of the key issues. And I think one of them you put your finger on just now is on the center-state relations. So what we've seen is that there's a lot of polarization happening in Indian politics beneath the surface of political stability at the national level. It is true that at the national level, there's quite a bit of political stability, more than we had for 3 decades before 2014. But beneath the surface is a lot of political polarization, and that makes it very difficult to coordinate between center and state, where the different parties are in power in center and state. So that requires some degree of cooperation, coordination for a variety of reasons. If you want to attract large investors, much easier to attract them in a BJP-run state than it is in other states. If you want to invest in long-term infrastructure, if you want to invest in human capital, it's much easier to do it in states where the same party is in power. Otherwise, coordination is very difficult because of polarization and low trust. And I think we need to address this in some way so that our domestic politics is not coming in the way of our growth possibilities.
And Suyash, if I can just briefly interrupt, before you get to the second point, briefly interrupt you here. This problem of uncooperative federalism, as I'm calling it, will exist irrespective of who comes back and forms the next government, right? Because if it is the BJP that comes back and forms the next government, you're going to continue to have a pushback, let's say, from many of the southern states, that are run by regional parties. And if a Congress-led alliance comes to power, then the pushback just shifts to BJP states, right? So this problem ain't going away.
Polarization is here, and it will not be easy to undo it. We have seen this kind of picture play out in the past. In the late 70s, there was a lot of polarization. The Janata Party came and dismissed all the Congress's government in 1977. 1980, Congress came back and dismissed all the Janata Party state governments. There was a lot of polarization, and it was a bad time for Indian economy also as well. The second point is that now more and more, especially in this campaign, you're seeing geopolitics has become a very important issue for domestic politics in India. I mean, it's a good thing in many ways. Public is getting involved, but it also makes kind of a balance between populism and pragmatism more difficult. I'll give you a difficult example: China. It's a difficult one. I'm sticking my neck out to say this. That one way to benefit from China plus one is to attract more investment from China. Because many Chinese firms are looking to move out to other countries. They're investing in Vietnam, Mexico, Malaysia, other places to diversify, also to mitigate the risk coming from the US-China kind of antagonism. And many firms that are foreign firms that have invested in China want to move out of it, but in a manner that they can import from China some inputs and then add value in the country where they're investing now. Both these possibilities have become very difficult because we have broadened the kind of hostility. There's a border crisis, but we've taken a broader stand, and that's become part of our domestic politics now. That investment from China is not wanted, trade is not wanted. Although we have raised tariffs, trade continues obviously, but it's become expensive.
I mean, imports are only
because
rising
China is
from
quite
China,
competitive, so it's very competitive. So despite tariff, you have to import from them, but it's expensive. Downstream firms become less competitive on the margins if you are importing with that level of tariff. So because of the way this politics is playing out, it will become challenging to strike a balance between, of course, we have to protect our geopolitical and security interests, but we also have to pursue economic prosperity at the same time. And cutting away from the world's largest manufacturing kind of hub is not an easy decision to take. There are costs to it. Another issue that from this campaign I observed is this heightened rhetoric around inequality, And what's changed now is the way Congress party rhetoric has changed, because it was obviously somewhat left of center for a long time, but it's now taken to another level. And it may be responding to something its feedback is getting from its own surveys and from the field. But basically, traditionally, Indian governments have responded to inequality-related issues by raising fiscal interventions. So basically, demand-side interventions of variety, whether it's employment guarantee, subsidy schemes, all of those. Now, if you look at the last few years, Indian government's investment promotion has also relied a lot on fiscal subsidies. So if the government feels the need to respond to these in the next few years, there will be trade-offs on the supply side and demand side, even if the BJP government comes back to power. Because if this issue becomes a really big political issue, I don't know whether it will, then there will be difficult decisions. And even this government has done cash transfers and other things to boost certain segments.
And let's not forget, I mean, I think, whilst we're all breathless comparing India with China and talking about the rise of India, and justifiably so, we are still giving out free grain to, sort of 800 million Indians in that sense. So it's not going away, and it's a 5-year promise.
Yes, it is a 5-year promise. It's a rapid scale-up of the food subsidy plan, which was supposed to be temporary. Cash transfers that have been instituted, it'll be difficult to withdraw them. So there's a lot of demand-side interventions that they have felt the need to do to address inequality and distress in certain sectors like farm sectors. And if the political mobilization on inequality increases, on the margins, it will be difficult to do supply side, especially where fiscal outlays are required in areas like infrastructure and PLIs and all of those, while also trying to address this. So these are difficult political economy challenges: center-state relations, geopolitics and economics, and inequality. And this next government will have to deal with them in some way or the other.
Okay, get that. Thanks very much. I think all of you have set the context. I'm going to spend the next 5 to 7 minutes going back to some critical issues you all raised. For instance, corporate earnings. I want to talk about infrastructure investment, because there is a trade-off coming there as we head towards a lower fiscal deficit target. I also want to talk about inequality, of course, but reforms, which is a conversation that's been totally missing in the weeks and months before this election. So I'll come back to you, Hiren, with the corporate earnings point that you wanted to make as one of the fundamental structural issues that will keep this market buoyant, irrespective of the political outcomes.
Just before that, I mean, it's a very important point about the center state, but if you look at the actual data over the last 10-year period, and you look at which are the top 10 fastest growing Indian states, you would notice that it's a combination of BJP ruled states as well as non-BJP ruled states. So my quick data check suggests that Karnataka and Telangana were the fastest top 2 growing states over the last 10 years on a per capita income basis. And I don't think both had BJP government for most of those periods of 10 years, right? So I think it's also a bit of a nuanced picture in terms of it depends a lot on the relations. But coming to your point on the corporate earnings, I think.
Okay, before you come to that, I think the point you're trying to make is that whilst it's fractious and it makes newspaper headlines and media headlines, you don't see the center state sort of not very pleasant equation hurting the broader growth story. That's the point.
That's my limited point.
Okay, I get that.
And on the corporate earnings, we are in that phase of the earnings cycle where earnings are growing much faster than the nominal GDP. If you look at India's very long-term trajectory, nominal GDP and corporate earnings both have grown at about 11% or so. I'm talking about 20-25-year history, but as all of us know, corporate earnings do not happen in a straight line. There are always business cycles, economic cycles. And India had its own economic cycle between 2014 and 19, where a lot of structural reforms were being passed through, like GST, inflation targeting, RERA, and many other structural reforms happened in that period. but that also had a negative impact on the corporate earnings for a period of time. And
Yes.
our earnings cycle in earnest started from 2020 in the midst of COVID, very ironically, that corporate earnings cycle in the earnest started. So now over the last 3 years, we are at about 20% plus CAGR, and it is expected that at least you have 2 to 3 years of mid to high teens earnings growth in front of you. Where is this earnings coming from, right? That is very important. The first and foremost is the financial sector, the largest part of the benchmarks. The financial sector is today one of the best asset qualities we have ever seen in a long period of time. Whether you look at retail lending, corporate lending, both are undergoing a very structural change in terms of underwriting practices. I mean, look at how many bureau data is available. Look at what GST collections can do to the SME lending quality. Look at what the databases which RBI has created for the mid-corporate and the large corporate lending asset quality. So there are some structural changes. The underwriting practices have become much better. And as a result, the corporate asset quality and the retail asset quality both are at the best of it. And the banks are obviously enjoying one of the better earnings growth. So that is one part of the earnings. And then you have the sectors like consumer discretionary and industrials related sector. I mean, we talked about China plus one. On a daily basis, we tend to meet companies which are telling us that they are getting inquiries from the global auto companies, global industrial companies, global power manufacturing companies to do more and more outsourcing of manufacturing in India. And this trend is real. This trend is happening right in front of us. So that is driving the earnings growth for the industrial sector. And finally, I would make a point about real estate. India had a real estate cycle. Usually the real estate cycles are very long. You have 10 plus years of real estate cycle. It was a booming real estate from 2004 to 2013. And till 2020, the real estate sector had its own issues. But now we are in that phase of the real estate cycle where, again, the pre-sales and the business development activity is growing very fast. So these are the areas which are driving the corporate earnings, in my view, in the next few years.
Okay, a quick follow-up to that, Hiren, 20-second answer. Do you believe the earnings trajectory that you are estimating supports the valuations we're seeing in Indian markets right now, and in fact, maybe opens up room for upside potential, or are we fully priced out on this?
Yes, valuations are always a function of growth and cost of capital, right? I mean, at a very basic level, P multiple is a function of growth and the cost of capital. Now, India is growing at about 11% in nominal GDP, corporate earnings in a very long term, 11-12% corporate earnings growth. And then what is most underappreciated about India is the macro stability and the inflation control which we have achieved as a country over the last several years. We used to be one of the fragile five economies not so long ago. 2013, taper tantrum, it was a very different outcome. And Indian currency is one of the most stable currencies in the last 24 months against US dollar, right? So the stability of macro and lower inflation along with the corporate earnings growth. And the final point I would make is that the rise of the domestic savings, financialization of the domestic savings, which is providing a good counterweight if there are foreign outflows, and it makes markets much more resilient. So if you all put together all of that, I think valuations are fair in our view. They are certainly not cheap, but you are buying a good business at a fair valuation is how I would put India.
Okay, fair enough. Sonal, we discussed infrastructure. It has been one of the outstanding achievements of the Modi government besides fiscal prudence. Again, we've discussed that. I'm just wondering what the trade-off is going to be in the next couple of years. If a Modi government were to come back, it's difficult to predict if this infrastructure push will continue, if there is a different government, at the center, or a different political alliance at the center, and what their spending priorities will be. But if we were to see a return of the Modi government, we're still going to see less space for spending, for this kind of accelerated spending on infrastructure. Is that a fair argument to make, given the fiscal deficit target we have over the next 2 years?
That's fair, Menka. I think, our target is to get down to 5.1% on the center's deficit this year and then to below 4.5%.
Yeah.
In the last, 3-4 years, we've seen central government capex as a share of GDP move up from 1.7% of GDP to now closer to 3.5% of GDP. I think, going forward, given the fiscal targets, this pace of acceleration is quite unlikely. We could see central government capex essentially stabilize here. That said, the nominal GDP is growing, corporate earnings are growing, and there's also the National Monetization Program, which is another mechanism to basically fund your infrastructure program without hurting your fiscal finances. So there will still be a bigger pool of money available on infrastructure spending. But I do think that, as a country, our infrastructure financing needs are so large. It's just not possible for the infrastructure funding to be driven by the government all the time. And we need to see, there are areas where the private sector will not participate, like, if you're talking about a remote rural road somewhere, so there you need the government to come in. But for other segments, I think we will have to see private participation in infrastructure basically come back. So I think it's going to be a mix of those factors over time.
Okay, a very quick question to you and also to Suyash right after you answer this. One of the things that was absolutely missing, pre-election and during the campaign is any conversation around reform. And by reform, I mean real reform, right? For instance, a factor market reform. Okay, that doesn't get votes. In fact, that's, maybe drives votes away, but nonetheless, right? Conversation on privatization, something that we have been underperforming our targets for the last several years. What do you think, sort of need to be the priorities there?
Right. So I think one is sort of continuity in terms of the approach. So infrastructure, attracting more supply chains into India, whatever is needed to make that happen. I think that continuity is quite important. Second, as you said, land labor reforms have been pending for a very long time. That said, I do think that if you look at some of the southern states that are attracting these smartphone-related assembly, have made changes at the state level on factor market reforms, because ultimately, states are competing with each other to get the investment going. So yes, you need the center to also push it. It has to be part of the reform agenda. But I think there's also sort of bottom-up competition that's going to drive it. So that's second. Third, I would say tax simplification. GST, for instance, the idea was to make it more comprehensive in terms of including, things that are currently excluded on petroleum, real estate, etc., so that you can bring down the GST rates over time. So I think tax simplification, both direct and indirect, is a focus. And fourth, I would say, in terms of judicial and bureaucratic reforms, that remains an important part of the ease of doing business that India has to do in terms of both domestic investment and attracting foreign investment. So I would say that's the fourth important reform agenda.
Okay, so Yash, can I get your view on the fact that, these are not things we spoke of going into the election, definitely not in the focus when it comes to votes, and may not even be priorities over the next 100 days, when a new government takes up?
Yeah, so reforms in the way we speak of has never been like a mass issue in India. They've not talked about in electoral campaigns in this way. So I'm not surprised that this was not something that was part of speeches and all. Once they do it, then they say, okay, we did GST and we did IBC, or we did more inflation targeting and all of that. But before it's being done, because there's a kind of uncertainty whether it will get done or not, people don't want to talk about it in this way. But I think in terms of the priorities in the next few, at least 1 or 2 years, there are lots of issues that are at the state level, and mostly at the state level, like land and labor. There's not much that the center can do. It can try to make model laws and issue advisories, but the states have to do most of the work. And some states, as Sonal also said, are doing it. But there are areas in which the center can create more enabling conditions. These are finance, which is largely the center level. There's tax, especially direct taxes. There's a lot that the center can do. And not so much on the policy side, more at the administration side, because in the last 10, 12 years, there's been a lot of increase in disputes on taxes. So a lot of tax claims go into disputes, and they go into dispute for years, and then eventually most of the cases government loses. But in that time, there's uncertainty about whether you can get the money or not. Similarly, there are areas of various areas of regulation in which the center has a role, whether infrastructure regulation, food safety regulation, and so on. There we build institutions, but there's a problem in terms of the process they follow to make regulations, the kind of enforcement actions they take and all. So there's a large agenda of trying to inform the institutions that make and enforce these regulations. I wish these things were, discussed more, but I don't think these are usually discussed in campaigns in India, but there are priorities to be kind of got right over the next few years. It's not a short-term thing. I just want to take one issue on this center-state relations. So I do agree with the implication or the Hiren had made that there is a certain administrative coordination process that works independent of the political rhetoric, and that often solves many issues. For example, on center-state relations, on fiscal matters, on transfer from center to state, there's been quite a bit of stability over time. In fact, despite there's so much kind of rhetoric around it. But I think something has changed in the last couple of years or so, and let's see how that goes on. There's been a lot more kind of antagonism. And if you look at the large investments that have been attracted there, it attracted mainly towards a couple of states where BJP feels that it has kind of secured power. And it is able to kind of give promises that it will be able to keep in those states. So that I think is a limitation. If we continue down that road, it will become difficult. A couple of chief ministers accuse the central government also that we are not getting enough cooperation from central government to get these large investments in our states. So maybe something has changed. Maybe it's not. I hope it is not. And we will continue to see investments irrespective of who is in power in which state.
Okay, great. Okay, so now I'm going to come to one quick final wind-up question from my end, at least. To all three of you, we started this discussion with this theme of what should global investors be watching, and I know it's difficult to tell, but all three of you have taken the position that it's most likely going to be BJP government coming back. So to that extent, let's assume that to be the case, and I want you to identify what should global investors be watching for. Let's say at least in the first 100 days, and then we'll have time to take 2 or 3 audience questions. So Sonal, can I go with you on this? What should investors be watching for?
Well, first 100 days, I think, is sort of a vision setting period. So I think that should set the vision for what the next 5 years will bring through. I think some of the factor market reforms like digitization of land reforms or, labor code of conduct, I think some changes on that could come through as well. So in terms of 100 days, I think that's the main focus. There's a lot more, of course. But Menaka, I think the main thing we are all watching is when will private investment cycle truly broaden out and pick up. If there's one thing we need to be watching, I think that's the one thing.
Will you answer the question for me as well, since you posed it?
As I said at the beginning, I think all conditions are in place. It's basically more a matter of time. So I think we should see more broadening out over the next, I would say, maybe 12 to 18 months. Yeah.
Okay. But you're expecting this government, unlike in 2019, you're expecting this, if the BJP were to come back this time, that they will be more aggressive on some of these reforms and they will set a tougher agenda in the first 100 days itself. Is that a fair summary of what you're saying, Sonal?
I think it's going to be more policy continuity, Menaka. I think maybe the factor market reforms, which has been missing, comes in. Now, I do want to take us back to 2004, where actually there was, disappointment on day one of the election results. But actually, that was a period where we were coming off, again, 5-7 years of balance sheet cleanup. Private investment was at the cusp of picking up, and globally, actually, there was a big tailwind for India. And I think, in terms of where the foundations are today, in terms of balance sheet, are today as favorable as they were back then. And I think that is more important for private investments than compared to, let's say, 2014, where people thought that there's a focus on supply side reform, but you still had to go through a decade of balance sheet cleanup.
Okay, fair enough. Hiren, what will you and your sort of foreign investor clients be watching for in the first 100 days? Just a quick short list.
Obviously, the most important event would be the budget in July. And most of the investors would be looking at the stability in the taxation policies, as well as the, what's the glide path towards the fiscal consolidation which the government is looking at. and the third would be the infrastructure spending. Those three areas, I would say, will be the most important in the very near term. Factor market reforms are very important from a medium-term perspective, but my sense is the budget would be a good platform for the government to articulate some of that intentions.
Okay, and Hiren, since I failed to put you on the spot through the course of this webinar, let me try one last time. If it's not a BJP government and a Congress-led opposition or some such, sort of combination of parties, how bad is the hit to the markets likely to be, and for how long?
Yeah, it depends on between now and 4th of June, what is the market reaction, right?
I failed again, all right.
Yeah, if the market is already going in with much lesser expectations, then the reaction may be mild. But if the market is not pricing,
is that what you're seeing happen? Is that what you're seeing happen?
As I said at the beginning, I mean, some de-risking, some risk aversion is quite natural when you are getting into such a big event, and that's what we are seeing today. Nothing beyond that.
Okay. Okay. Last question to you, Suyash. What to expect in the first 100 days?
So I don't know who's going to be in power, but I just want to make a different point that, I mean, I'm not so worried about a coalition coming to power or not coming. I mean, anybody, because we had good growth and investment even in the coalition era. So there are kind of ways in which an Indian political economy works that can enable reforms and growth and enhancing kind of measures, even if 12 or 13 parties are ruling together. So even if suppose the unlikely happens that a opposition-led coalition comes to power, they'll have to prove themselves. And in the first 100 days, they'll have to take steps that at least will not undo some of the good things that this government has done, and may also do more things. And if you look at the manifesto of the Congress party and other parties, there's quite a bit of focus on economic. So, for example, Congress manifesto says that jobs are created by private sector. Private investment is what we want to focus on. So they are not, at least they don't seem to be trying to do something which the rhetoric of the campaign seems to suggest. So there will be continuity irrespective of who is going to be in power. And we shouldn't be too worried if some other kind of election outcome comes from the one that we expect. And you know which one we expect, right? That's all the posters have been telling us.
Yeah, well, absolutely. We've lived through coalition governments and we've seen growth sustain. So, thank you all three for answering all of my questions. I'm going to pick a couple of audience questions. First one goes to you, Sonal. I think we have a question coming in about the impact or the outcome on the rupee and the foreign exchange front. And I do know in your April note, you had, sort of made some mentions of what you think the FX impact will be, in both scenarios. Do you want to quickly run through that?
Right. So I think, into the election, actually, if there is some reduction in terms of expectations, with respect to what opinion polls showed before the election began, then actually we'll be starting off on I would say, a steadier footing relative to expectations. So if we do, let's say, in that scenario, get, a BJP victory, I think the nervousness will give way to more optimism and we could get more flows. The challenge, though, is that the RBI has, been building its FX reserves and containing the volatility on INR, dollar INR. Our view is, though, the RBI might step back a bit and you could see maybe about a 1% appreciation in a scenario where the BJP comes to power. If it is a scenario which markets are not expecting, which is the India coalition wins the elections, then I think markets will be disappointed relative to expectations, and there would be a currency weakness pressure. But again, given the RBI's intention to curb volatility, we don't see INR depreciating more than 1.5% on the other side as well. So I think the movements will be more on equity, and I think less on currency markets because of RBI's intervention on both sides.
You have a scenario for equity? Not in case the Modi government comes back, but if an India coalition government were to be formed?
I think, I defer that to Hiren. He is the equity expert.
Hiren's not taking any short-term positions on this at all, so I won't bother him yet again. Okay, I have one more audience question I want to take before we absolutely wrap this up because we're over time. Suyash, I'm going to put this to you. It's an interesting question. I don't know how you're going to answer this, though. How will it impact the BJP without Narendra Modi? I'm not sure why this viewer has gone all the way to that extreme, but nonetheless, let me ask you this question. A BJP without Modi leadership.
Political scientists have measured the kind of Modi bonus that the BJP is getting right now because he's very popular. He's the most popular leader of any major country in the world. I mean, no one enjoys this level of popularity. But let's also understand that the party identification gains have been made by BJP a lot over the last 10 years. So if you look at the people who identify with any party, 40% of them identify with the BJP. And the party has expanded a lot, its base, its membership has grown, its cadres have grown. It's also taken a lot of leaders from other parties. So its organizational strength is quite significant. Even though, of course, the serious political scientists have argued that the party gets the benefit of having a leader who is very, very popular. But it's still a very strong organizational base that will continue even after he retires or moves on to do something else. So there is I think the BJP will not be affected any. There'll be some effect, of course. There's a Modi bonus that will go away, and depending on who takes his place, there'll be some kind of a decline in support. But there's a large base of support that the party has built and expanded its own cadres and membership over the last 10 years, which will pay dividends going forward for the party, political dividends.
All right. On that note, I'm going to wrap it up. Suyash, Sonal, and Hiren, thank you very much for joining me this Friday morning, answering all of our questions. These are questions we'll come back to revisit once the election outcome is clear on the 4th of June. And we hope to be able to reconvene an India Edition conversation on the 5th morning, but we'll let you know details through the newsletter and on social media. To all the audience that were watching, thank you very much.
Thank you.